Why? We can see that the short-term crossover to the downside has taken place. Now we're going to go back in, look at the medium-term crossover from Vantage Point. That's also crossed to the downside. So in the short and the medium term, things are not looking great for the US dollar index. Now in the long-term crossover, that has also taken place. Now looking at the US dollar index, and when I'm doing my forecasting for the other different currency pairs, I'm always reviewing the US dollar index, the British pound, the euro, the Canadian dollar. All of these make up the US dollar index. So if this index is falling, chances are euro US is going to be higher, US Canadian is going to be lower, and pound dollar is going to be higher, depending on intraday market volatility, news announcements, these things. But we're trying to look past that and see if we can, review the overall trend and get it right. So with that, the only thing that a point of interest here is that we need to take into consideration the short, the medium, and the long-term crossovers have taken place. However, our strongest indicator that we have here, that I have, is this triple EMA crossover, and it is not complete yet. So this is warning me, don't get too carried away with long positions on euro US, pound dollar, and things like that, because this thing could reverse back up very easily. Now the reason I say this, looking at the US dollar index a little closer, we got this crossover here in January, but if we back the Vantage Point software up a little bit further, it shows a little bit different, actually quite a bit of a different picture here. And this is what we have to take into consideration: pattern recognition, and more importantly, price patterns. We can see here that this buy signal from Vantage Point actually took place at the end of November. So we've been buying US dollars since the end of November. We've gone up, we've hit a leg back down. This is a corrective move, extended higher. We've then moved back lower to the 79.50 in a corrective move. We got the triple EMA crossover, but it couldn't hold. We subsequently moved aggressively higher, up over the 82 mark. We're now moving down lower again. But is this again another corrective move, or is the US dollar getting ready to completely reverse? Well, another way of reviewing this when you're trading Forex is let's go back more than 6 months. Let's go back to a year to the date, and let's see what happened. Well, a year to the date, this kind of pattern recognition is extremely useful. We can see that on or about the middle of April of last year in 2009, Vantage Point put a crossover, the triple EMA crossover took place on the US dollar index, and hopefully everybody can see this okay. This is a pretty big warning sign for me, actually, that the dollar strength may or may not be coming to an end. But with the pattern recognition, we can see that when this crossover took place, the US dollar index essentially went into a complete and utter free fall from the 85, 86 level all the way down to the 74 level. So basically we've had some corrections and things of that nature, but essentially for the majority of the calendar year in 2009, the US dollar came under heavy pressure. Now we can argue economics, we can argue what's happening in the euro. There's a lot of different factors that play into this on a fundamental basis, but in reality, it's my opinion that the market constantly is working in the price. Excuse me. Now, with that said, we know that last year at this time, the US dollar index began to sell off. So is this a repeat of that? Very, very difficult to say whether it is or not, but we want to keep this in the back of our mind when we're trading. Now, that's as much time as I'm going to spend on the US dollar index, and hopefully I've given everybody a lot to think about with that US dollar index and how it applies to the other currency pairs. Now, let's go in and see what's happening with the market here. We've got $459 in profit on this Great Britain US trade. However, our crude oil trade that we're taking for fun is down about 100. Still leaves us about 349. Now, we're probably not going to, before the webinar is over, we're not going to be able to probably close that crude oil trade, but we might, so we'll see how that plays out. Now, what we can look at here is we've got the Euro US has now moved over the 136 level. Euro US is a very, very significant pair in the Forex market. It's the heavily traded pair, so it's certainly worth a review going into pre-market trade. Now, we are sitting about 934, so North American trade is underway. So let's see what's actually happening with this euro. Euro here is the 3-day has crossed over the 8-day. It's trying to cross over the 18-day, but that hasn't quite yet taken place. So looking at Euro trade for the euro today, we're going to go in and have a look at the short, the medium, and the long-term crossover from Vantage Point. We've got the short-term crossed over to the upside. We're now going to go into the medium-term crossover and hit apply. We can see that this medium-term crossover is just now attempting to make a crossover. Now, the long-term probably not going to cooperate here. Well, actually it is. So we've got the short, the medium, and the long-term crossing over to the upside. Very similar to some of the other pairs. Now, what we also want to do here, let's have a look at adding other Vantage Point indicators. Let's look at the predicted TSI. Predicted TSI is crossed over to the upside, excuse me, out of oversold territory. We're still sitting in negative territory. We're not above this zero area here. However, obviously the euro does have room to extend. So let's go in and have a look at the Vantage Point predicted high and predicted low for the day and see what's happening, where the euro is likely to encounter intraday resistance. So we have 136.30. We have the Neural Index is turned up. We've had 4 negative days in the Neural. This is the second positive day. So we have 136.30 is the recommended high. 134.99 is the low. So what's actually happened today is we've hit 135.54 and we're at 136.28 is the high. So 135.54 is the predicted low, is not, excuse me, not the predicted low, that is the low for today. So at 135.54, let's have a look at our pivot support area. We can see we have 135.02, 134.70, and 134.92. So the market is holding above that, and it's actually holding a considerable distance above that 3-day predicted moving average. This, in my opinion, suggests that we could be looking at a bigger move on that Euro US coming, because again, our pullback, if we use the 135.42 as an area where the market's pulled back to, that's considerably higher than where we would normally be. So that is a point of concern for me. Now we can see that crude oil contracts are getting hit as we speak, but we've still got a good profit on that Euro US. And again, the crude oil contracts, again, we're just taking that. We